The following is a presentation of TFNN. Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. This is Steve Rhodes, Tom O'Brien. We do appreciate you being with us today. Market-wise, we have the Dow up 82, NASDAQ up 10, S&P's up 4. Then get gold down $9, the silver's off 47 cents, platinum's down 19, bonds are up 10, and the good old U.S. dollar is up 12 ticks. And this dollar, man, is rocking these markets, man.
Oh, it is. In fact, let me just pull back up on the screen. I just happen to have a 30-minute chart up on the dollar, and we got a little Gartley buy pattern.
Isn't that a ball?
Yeah,
that's
so,
heavy.
I mean, yeah, you know, been making.
And that means it's going up, folks.
Yeah, yeah. We've been making, look, lower lows and lower highs.
Right.
So right here in the 77, 75, 77, 83 area where, it's gotten down to.
Yeah.
This area needs to hold. Because if this fails, it turns into a butterfly pattern.
Right.
Typically. So, yeah. But here's a sense of reality, though. In how you can put things together, because you take a look at the dollar index, just like you're pointing out.
Yes.
If you go over to Europe right now, what the DAX is doing now, I wish we had volume on it. I don't have the volume on. I know.
Yeah, it comes late.
Yours is But what the DAX has done,
maybe I'll stop paying for it. I pay for everything else. We'll see. Yeah.
And it has definitely shot the across the bow, because it's gone up. It's tested that swing point.
Okay.
And all morning it was trying to get up there. After our market opened up. And so
cool.
Look
at that.
So what we're getting here is likely a rejection on price and volume at that swing point.
And what you have now, I have what happens, folks. I don't get the volume for about 4 or 5 hours after the fact, but the volume on the 19th, on the 16th,
cool. That's cool.
That it's going into was 377 million. And I'll just give you an idea. Yesterday it went into a 245. So we'll see whether it's heavier or lighter. Today by the end of the day. But it's a big number. There's no doubt about it.
Yeah.
Because if it does take that swing point out, that means that we're going to go higher.
That's right.
Yeah.
That's right. But right now, when you take a look at the FTSE, the FTSE is lower, and the DAX is starting. And the DAX have been trying to attack that all morning.
Right. And we gave it up good yesterday.
Yeah.
We gave it up good, no doubt. Now, so check this out, folks. If you see the in the Journal today, right? We've talked about this a couple weeks ago. John Paulson, who made billions on the housing deal, made billions last year also.
Yes.
What has happened is that his funds are down pretty dramatically.
Yeah.
And what's intriguing, is that we were actually looking at his portfolio 2 weeks ago.
Yes.
And I was speculating, what is going to be sold here?
Yeah.
Well, it's a front page story in the Wall Street Journal today.
Okay.
So what we should do is, why not? Let's go. Now, if you want to see how this works, folks, how a professional turns around, and what's going to happen here is this. What you're going to see, if you're watching Tiger TV,
so cool.
We're going to basically take apart Paulson's portfolio. Now, this is where large hedge funds absolutely have, it works against them. There's no two ways about it, okay? So what you have here is this.
It works against them because you can track, in essence, what they're doing?
You can track what they're doing to a certain point.
Yes.
Okay?
Yes.
So what the speculation is this. Well, there's two different things. There's one part that's not speculation. Paulson's been selling some bonds this week. Okay? Because what ends up happening, his two largest funds are down 20%.
Yes.
Now, the 20%, however, does not entail what has happened this month.
Okay, right.
Okay?
Right.
So that was last month, for the year last month. So what other large animals in the marketplace are doing, they're doing two different things. They're looking at his portfolio, and if they own something in the portfolio that he's got to move out, they're moving that out.
Okay.
Now, that puts pressure on the stock.
Yes.
That's the first part.
Yeah.
The second part is strictly, he owns something, I think this looks weaker, I'm going to start selling it right now because the pressure to sell is there. Okay, so what we're going to do is this. We're going to go over, and I'm going to hit Paulson up, and then I'm going to hit his whole portfolio. Okay, so when you see how this works, folks, this is pretty incredible. Let me just give me a second. I'm going to put this up. So I got to put one on top of the other here. Oh, cool. Now, what you're looking at, this is going to be 8 pages of what Paulson owns in one of his funds, okay? So let me just see.
Oh, that's nice.
If this comes up. Okay, that's number 2. I got to get rid of number 1 here for a second. 1 second. Let me get the right one up. Okay. So let's see. Number 2. Bring number 1 down, which I think oh, number 1. Oh, good. I can bring that down. Okay. Okay. So what other large funds are going to be looking at? When you're looking at this, you're looking at on the left-hand side what the ticker is, what the position is, and what the prices are. So as you're going through this, you know, what you're going to see is every single position inside this fund. So what a lot of the large funds are going to do is say, okay, what do they think basically is weak?
Yes.
And are they going to start selling into it?
Yes.
Now, this gets vicious, folks, because if they can get something in his portfolio going down,
right,
what ends up happening? The portfolio goes down.
Yeah.
Then what ends up happening? More positions go down. So what you're going to see is the bottom line is that the guy's going to get attacked. You know, and that this. You know what the sickest thing?
What's his largest position?
And this one here, it'd take me longer than that to kind of figure that out. Well, I'll figure that out by we'll go through that. You know, because this just happened, but I'll pull a few of them up. It looks to me. Current price position. I can do this a different way. Well, there's if I do a principal, 81 million.
So he's got 81.
69 million, 86 million. These ones here are a lot of bonds. That's what's going on right there. These are French stocks, though.
Yeah.
91 million. They'll be all over that. 80 million. Well, what they'll do, I mean, it doesn't take long to go through this, really. You know what I mean?
Yeah. It's such a cool tool.
Yeah, no, it's
really a cool tool.
It's a big deal because what ends up happening is that you'll see. You know, now my take on this when I look at this, to me, what it's going to be, and it's going to be whatever the first sale is in the GLD, is going to be the deal.
Yeah,
that is his largest position. Period.
Yeah.
Okay, and it's large by a huge amount. Now, what the question's going to be is that.
Well, so his portfolio for September is not looking good.
No, it's not.
Oh, I mean, he's got profit.
Oh man, that's even more intense. That's right.
You know.
And so now watch what happens here. This is what happens inside the fund, folks. Is that if we had money in the fund, we'd have to give him notice by the end of this month in order to get our money back. In January.
That's right. 3 months later.
Okay.
Yeah.
So now he hasn't got a lot of people that want their money back yet. That's what the article said anyway.
Okay.
Bottom line, I expect what you're going to see come, the filing is September 30th.
Yes.
Okay?
Yes.
So when we're on the air September 30th, the following day, what I expect you're going to see is under the GLD, you're going to see sales that have taken place.
Okay. Yeah.
And the reason being is this. The way his GLD is set up is this, is that you can put money in, and immediately, even though you're in an equity fund, you immediately can say, "I want money in gold," which is really smart of him. That was a nice trade. And just after the gold downdraft alone, I expect that you'll see at least some folks take their money out.
Yeah,
because they still made money.
Yeah,
so
exactly.
It's like, are you just going to sit there forever?
That's right.
No, those institutions. The bulk of them may sit there forever, but there's plenty of smart people that won't sit there forever.
Yeah.
So it's going to be interesting watching this, how this attack takes place.
Well, you know, I mean, you talk about Polson, and you talk about funds like that, and, you know, we've had, you know, a heck of a nice bounce over a couple of days here.
Oh, yeah.
But the institutions have been sitting on the sidelines. I mean, there's been no big...
Oh, yeah.
No big money coming in.
They've been selling. I mean, I think they've been selling anyway.
Yeah.
Hey, Amazon, right? So check this out. Amazon, folks, you really want to watch Apple closely. Yes. Amazon just came across, okay? They're coming out with a tablet.
Yeah.
This afternoon. $199 versus Apple is at $400. Now, the difference is, though, Apple is 9.4 inches and Amazon 7. So it's you know, that 2 inches is kind of a lot, I think, tablet form-wise.
Yeah.
You know, as to what the visual is going to be. So I think the visual is going to be important, you know, because Apple definitely has it down, you know, but Amazon, what Amazon has is that's the shopping mecca.
Yeah.
You know?
Well, look, what Apple certainly was able to do was they were able to revive a product category that had been tried, for years.
Yes.
Look, when I opened up my stores at Disney World, Epcot Center in 1999.
Right.
And this was on my crystal business.
Okay.
So because it was so high tech.
Yes.
We actually, what we bought for our employees were wearable PCs.
Okay.
Okay, and it was a PC that was a belt that went around you. Okay, and it had the CPU and everything in there.
Yeah.
And then it was hooked to a tablet screen.
Okay.
And so because there was so much the order demand with regard to customers and trying to keep my employees efficient, I got to.
Right.
This is 1999.
Wow.
12 years ago. I paid like $5,000 for each of
bet
those.
you did.
At least
Oh my
$5,000.
God.
At least $5,000 for each of those things, and it was just a small little screen.
Right.
Okay. But we also were looking at the tablets at that stage.
Sure.
You couldn't get any traction anywhere with those types of devices.
Right.
Then I remember they came out with the computers. I can remember who it was.
I still got a
NEC. Yeah. But they had the one where you could turn the screen and you could turn it into a tablet or what have you.
Okay.
With Apple, with its following, if you will,
yes,
has really been able to take products,
yes,
and it's really been great at convincing people that they needed something they didn't know they needed.
Oh, I know. And loving it.
Yeah.
I mean, listen, I'm hooked on the Android deal, and that's, Amazon's the Android, and I was disappointed when it said 7 inches versus 9. I says, oh, man, Angie has one of those tablets.
Yes.
I really like those. Those are nice. So we'll see what it looks like, man.
They're
7 inches might be big enough to get you the visual.
Yeah. I don't know what I don't own a tablet.
Right.
I'm in front of screens enough that when I want to get away, I don't want to. But they are very cool, no question. There's an appeal towards them. I don't know, how people are actually using them. If it's more of an entertainment tool,
they're using the shop.
To shop. Okay, so
and listen to us.
That's okay. That's the reason why you should be buying those tablets.
Totally.
Yeah.
What's happening, folks?
Yeah.
What's happening out here, folks, is that they sucked more money in, right? Had to dial up $100 and then just took all the bread.
Oh, well, sure. Look. Yeah, between
amazing.
No, it's
amazing. You gotta love it, man.
Yes.
You gotta love it.
Yeah.
And what I'm saying, you gotta love, folks, is that not the aspect of the market going down. You gotta love the aspect that understanding just moves. That's the bottom line.
Yeah. No, that's right. Just the breathing pattern, which is so much when I was talking this morning just really about patterns, just the normal patterns that each of us have.
Yes.
And so if people can accept that, you get up the same way, you put on your pants the same way, you all those types of things. Well, if you buy into that, which it's impossible not to.
Right.
The market's just made up of all those.
I eat the same thing every day.
Yeah.
I'm a creature of habit.
Right.
Yeah.
You drive home the same way every day. But you've got other routes that you could take.
Oh, yeah,
right?
Absolutely.
Even routes that are even more of a beautiful route.
And if I take the other route, then I'll take that for a year or two. And then I go back. And I do.
These markets are nothing more than all those same patterns that go in there.
Totally.
Yeah.
You stay right there, folks. Steve Rhodes, Tom O'Brien. We're going to be coming right back. The Dow's up 24. The rest of it is all red, folks. We're going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. We have the Dow up 13, Nasdaq's down 7, S&Ps are off 3.5. You get, let's see, gold's down 12, and that Gottlieb Steve was showing you, folks, dollars on the move, and the market just cannot stand a strong dollar. Pretty amazing. Let's get to Marshall in Washington. Hey, Marshall, what's going on?
Morning, Tom. Good morning, gentlemen.
Thanks for calling, man. Thanks for holding.
Just to tip my hat to Steve, I want to express my gratitude for TFNN. I really appreciate you guys.
Well, we appreciate you being out there.
Absolutely, and thank you very much for saying that.
You're up nice and early, aren't you?
Oh, yeah. It's almost before breakfast.
So, hey, listen, what's the weather in Washington right now?
Today is going to be a real nice day, probably going to be close to 80.
Oh,
yesterday
beautiful.
was cloudy and nasty, but today is a pretty nice day.
That's awesome.
Nice fall day.
Well, we hope you have a great day, man.
Well, thank you. I've read your book, Tom, and I'm kind of trying to learn about volume.
Yes.
And on the Dow Jones 10-minute chart, on the 16th at 9:40 in the morning.
Am I using the diamonds for this then?
No, I'm using the Dow chart, the Dow Jones 30.
Okay.
And I'm showing a huge volume spike there, and that's volume on the top.
Okay, let me have the date again. What date?
It was on Friday the 16th, 9:16, and it was at 9:40 a.m.
9:40 a.m., okay.
I'm on a 10-minute chart.
Yeah, no, I see what you're looking at. Okay, so if we looked at that, the SPY had 12 million shares there. Okay. So
that's volume on the top, isn't it? Doesn't that mean that the Dow is going higher?
No. Okay, cool. I got what you're saying. Okay, so now watch how this works. That 16th that you're talking about, at the end of the day, well, I can do this intraday for you, and it works the same way, Marshall, but I can't pull it up as we're talking right here, okay? But okay. The correlation goes like this. That, when that was going higher, right, that was going into the downdraft over on the 5th and 6th of August. And the difference was that it was only going into that with 1/3 of the volume of how we came down.
I see.
That's it. It's always the correlation as to what you're going into. Okay. So all you do, the way you do this, folks, okay, is that you just set up your crosshairs and you say, okay, tell me how you're coming into the supply line, because that's what you're doing. And we were coming into that supply line with dramatically lighter volume. Now, if I set this up on a daily and we put it there, I suspect what we would have had is that 200. What did I say on the? Let me just see it again.
It was $1.094 billion that day.
Okay, you mean for the whole day?
Yeah.
Yeah. Well, that was going into $4 billion though.
Yeah. Right. Yeah. But I was just the spike was the thing that got me, because as I understand it, that usually means that's a fund or some really heavy hitter that does that.
So watch this. Stay with me now. That spike was going into another spike down that had 3 times the amount of volume.
Yes.
Oh.
Right.
And in fact, I've got the diamonds up on my screen, and so if I go back to September 16th at 10 o'clock in the morning, because that's when it made its high, if you will, at 115.13, the volume out there was 623 million shares. And you can see when that thing was getting tested, it was getting tested on 351, 129,000, 101,000, came back even on the 20th and got tested with 316, 149, 150. I mean, there was no volume when it got tested, and all the volume, as you take a look on the 10-minute chart, is all to the is really to the downside.
Right.
Even if you went to the close on the 16th in the last 10 minutes, which had the highest volume, still wasn't the swing point of that session, still had the highest volume, that got tested on lighter volume. Okay. And then the market just simply, when it gave it up on the 10-minute, it started giving it up at 2:30 in the afternoon on the 21st, and just started continuing to plunge down. So. Sure. That's how I take a look at the swing points in the 10-minute area.
Well, I saw that big thumb sticking up there, and I'm saying, what in the world? So that was why thank you.
Thanks,
thanks for calling. Yeah, thanks for listening.
Have a safe one.
Have a great day, guys.
You too. And here, let's look at this morning. So see what you see, folks, and this is what's important. They keep sucking money in the marketplace, okay? The bottom line is that's what the market's all about. The market is about to take the most of money in the least amount of time, and that's it. And, what you had here this morning is that the first acceleration step didn't even have the volume. See, what we're testing here now is this, folks, is the lows of yesterday, which is the 116.84, and they're going to try to make an ABC down.
And if you take a look at the breathing of the diamonds, the high yesterday, 113.45, the low, 111.09, 786, 112.94. What's it hit? 112.66.
That's sick.
112.96.
You stay right there, folks. Steve Rhodes, Tom O'Brien. We're coming right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, more than 40 different mining equities, as well as some of the most popular precious metal ETFs, including the GDX and the SLV. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report that will help you take advantage of investment opportunities at the current historic gold price levels. To order your Gold Report today with a free 30-day trial subscription, log on to tfnn.com or call our office directly at 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
According to a recent survey conducted by CNBC, 65% of Americans are less confident about their investing due to the market's recent volatility. Even worse, just as many people believe their best days are behind them. Don't buy into it, folks, because they're dead wrong. And to prove it, Tom O'Brien and I are hosting a free workshop, Money Mastery, this Saturday, October 1st from 8:30 to 11:30 a.m. at the Grand Hyatt Tampa Bay, where we'll teach you how to obliterate those 5 elements that are jeopardizing your family's well-being. We'll teach you how to play the money game, what you can expect, and how to get extraordinary results. And don't tell yourself you don't have the resources. You absolutely do. All you need is 3 hours of time this Saturday, October 1st from 8:30 to 11:30 a.m. Go to the homepage of tfnn.com and sign up for Money Mastery now. We look forward to seeing you there.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of tfnn.com.
Welcome back, folks. This is Steve Rhodes, Tom O'Brien. We have the Dow up 12, NASDAQ down 6, S&P's off 3.5. And don't forget, folks, coming this Saturday at the Hyatt Regency in Tampa, Steve and I are going to be growling problem with you. Free workshop, 8:30 to 11:30.
It's going to be a great time.
Big time.
It's going to be a great time. We are going to help people find another gear.
That's right.
Oh, man, at least another gear.
Gear it up, baby.
Huh?
Gear it up. That's right.
You know, it's great. It was great doing your second hour with you yesterday.
That was fun.
And you know, and just a great story from you. You know, after kind of going going through the presentation.
Yeah, totally.
And, yeah, it's really really cool.
Big time. Big time. Let's go to our man Rick in British Columbia. What's going on, brother?
Hey, Tom, you weren't with us early in the morning, were you? You've been on the show since it started this morning?
No, I kick it off from 9 to 10.
Yeah.
And then he's been here from 10 on.
Oh, I see.
Yeah.
Okay, because when you mentioned the fact that you wanted to get up and the mind wanted the body couldn't, I thought maybe Tom slept in.
No, I was talking about my mind when I went to bed at midnight or so, and the mind was up at 4 a.m.
Yeah.
And
I just want to reiterate what the earlier caller said. I'm thankful for you, Tom, and Steve, and for TFNN. In the last 10 years, I wouldn't even think of doing what I'm doing if it wasn't for you guys.
Well, we appreciate it, man.
And I'm not saying it just because you brought it up this morning, but
Tom is our man.
No, listen, and listen, we're thankful for everyone out there. And you know, folks, the bottom line is, and you know, you can, but we would not be in business. I mean, that's the reality.
No question.
Okay, you know, we have some heavy expenses, man.
Yeah.
You know, and we enjoy it, you know. But we appreciate everyone being out there, and you know, we're going to step it up again. You know, so
which is so cool.
And so with that in mind, I mean, anybody that watched volumes can, you know, it was like, okay, when is this pullback going to happen? Because, you know, we went up on such light volume. Goldman Sachs, let's use that one for an example right now. I mean, we just got to sit now, short term, and just wait for that low to get retested again, eh?
Yeah. I mean, with Goldman, folks, what Rick's talking about, you know, Goldman's gone from 170 just in the last 6 months down to 91. It has volume at 91. Now, it gets better than that because, you know, when we bring this back to 08, you put it on a weekly, you know, what you have here is that Goldman, you know, has already gone after its May level. Actually, it's into March of 09 already.
Yeah.
And, you know, it's coming in the right way. The really cool thing here, folks, is this, is that, you know, what is happening is that the lows, the highs of that is 99, the lows are 72. So Goldman's probably going to go for 72. But it's coming in there with anemic volume. Now, you know, it's coming in there, you know, with volume of 49 million versus 158. That's exactly how I expect the S&Ps to come in, that good old 825. And if that's the case, folks, then you have action.
I mean, it's at least going to go test that real high volume spike out there from the September 19th time frame, which is 85.
That's right. That's 85.
You know, so it's going to at least come down there. And
yeah, if you put it on a monthly, 4-year monthly, you'll see that it's got pretty. You mentioned 72, Tom, but this thing so well it can drop $3 in minutes.
Yes.
But it looks like 75 is got real strong support.
Yeah, well, it certainly does, and you know the top of that. See, where it gets interesting here, the top of that is really 95. So it's going to be also how it comes into that 95 level. You know. So the good news for all you bulls out here, you want to keep an eye on this, because if the financials do break it, it's going to be a huge problem. I mean, a huge problem, too. And there's one, in Marbell. Keep an eye on Marbell.
Yeah.
Because,
sure.
You know, we had a listener call up yesterday with Marbell.
Right.
Jude from Ohio. And bottom line, if Marbell breaks, let me tell you something. If Marbell breaks, it's even a bigger problem than Goldman's breaking. I can see Goldman breaking because they got enough, basically... You know, fraudulent documents out there with Goldman that, yeah, they can go south in about a second, you know. But Marbell, Marbell breaks, man. Right. Get out of the way. You know, grab your telephone, grab your sailboat, and let's go.
Hey, thanks a lot, guys.
Have a great one, man. Have a safe one. This is Steve. This is Tom. You stay right there, folks. We're going to be coming right back. The Dow's down 3, Nasdaq's off 7, S&Ps are off 4.5.
If you're in the market for a jumbo loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then Everbank is your answer. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970.
Studies show that 10,000 hours is what it takes to achieve outstanding results, unless you use the power of leverage. The power of leverage, folks, is key to attaining outstanding success in your trading and investing. I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, and author of Mastering Probability, a daily trading and investment newsletter. Let me take your trading to a new level, a whole new level. Let me teach you the secrets that the real money masters use each and every day to produce consistent financial results. On top of that, I'll transform your life in ways you never thought imaginable. You'll overcome hurdles like an Olympian. Here's the beauty. I'm so certain that I'll transform your life. I'm giving you a 30-day unconditional money-back guarantee. Time, folks. Something you'll never get back. The time is now to take action. Go to the homepage of TFNN.com and order Mastering Probability. It'll change your life forever. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow right now down 17, NASDAQ off 8, S&P's off 4. That's quite a swing in price, isn't it?
It is, absolutely. And so, when we started the show, we were talking about the dollar. We were taking a look at the Gartley, pattern just on the 30-minute chart. Yeah. And that's worked. And I just think it's such an important pattern. It's great that you're doing a workshop tonight. Yeah. To help people understand it. And, what are you covering?
What we're doing, folks, tonight is this: 6:30, 8:30 Eastern Time. I'm doing the Gartley, I'm doing the butterfly, and then I'm doing the Tiger Gartley and the Tiger Butterfly. And what the difference is, folks, is that it's the difference of how they hit the swing points. So it has to do with price, has to do with volume. Yeah. The cool thing, there's no doubt, when, the first time I saw Larry doing this, I'm saying to myself, okay, well, hold it. That's an ABC down. That's an ABC up. What are we doing here? Right. And then once I figured out, I says, oh my God, this is dynamite because of the correlation. I says, hold it, man. This is intense. And what's so cool about it is that you're not guessing. Right. I love the idea. You wait for the number. Yeah. You put the trade on. You know what the risk is. You know what the reward is. Yes. And, folks, what you try to be in this business is an absolute machine. And I'm talking about machine in the best sense. Because once you understand, you just keep firing them off. If some work, some don't work, well, you just move on.
Okay? Yeah, the probability is really, in your court. And then, because of the volume analysis, so now you've added, which is so cool, the Tiger Gartley, the Tiger Butterfly, and, Marshall called, was grateful, and Rick as well, and what I'm so grateful for, because it's just one little moment, one decision that absolutely can shape your destiny. In my case, it was one of my business partners that was listening to your show. Yeah. We were driving to a golf tournament, a member guest tournament that we were playing at my club, and he was listening to your show and called me and said, "You got to turn this guy on, turn on your station." That's wild. And because of just that one moment, and then the action. Okay, because what you did was you were able to really show me and help me understand the potential. It was really it was just listening to you talking about volume. And what folks really need to do is go out and get your book. If they don't have your book, you absolutely have to do that. I mean, that's what I did. No, I did more than that. I didn't just buy the book. I came to the Master Trader Series. It was 2 weeks later, a week later, what have you.
Listen to this, folks. This is crazy. So we have the Master Trader Series going right now. What happens when you're training people, period, okay, is this. What I've found is this. You have, we're all different, right? What I've learned, which I really dig, is that when you have folks that absolutely, what was the, let's see, that it's more mathematical. I could tell you were more mathematical. I said, oh, this is good, man, because what does end up happening there is that once we all understand percentages and compounding and all that, but the reality is if you pay attention to them, right? Yeah. It's a whole different ball game, right? And so I said, oh, this is good, man. He really understood. Because I remember this specifically. So watch this. I'm not kidding. I'm going to set this up for you visually. So there's 5 of us in the room.
That's right.
And
Absolutely.
All of a sudden, Steve stands up, right? And, you know, he starts talking. He says, yeah, I see how that goes. And then he turns around and says to me, he says, you know, I said, well, how long have you been doing this? He says, well, I only heard about you about a week and a half ago on the air.
Absolutely.
And I'm saying to myself, I can't believe this. The guy turns around, comes to the...
Absolutely.
But that's how you have to dig into something. And now, of course, I know you, and what you're absolutely going to get, folks, if you're near this guy, and I've got so much off you. I absolutely have.
Thank you.
No,
Thank you.
And you know why, folks? Because 2 different things end up happening. The first thing that ends up happening is that it's a complete deal. You know, detail-wise, which is really important for what we do, big time. Okay?
Yes, yes.
And the second part is that it's the smile. Let's go. Let's go.
Absolutely.
Let's go, man.
Well, and the cool thing about, you know, for me, the roadmap in trading, okay, is that you just simply, your roadmap is flexibility. You know, the coolest thing yesterday was, you know, we didn't even talk about it. We were doing my webcast, you know, and I talk about how the universe puts you in a place for the, you know, for the right reason.
Right.
Well, I had originally, my webcast was supposed to be, I do it for my subscribers every other week. It was supposed to be last Wednesday. Knowing that we had all the astro activity and a new moon, I said to folks, let's move it to Monday.
Right.
We're going to be closer to the session. It'll be easier to gauge where, you know, what it is we should do. Well, we had technical problems here at the office, and 25 minutes before that, we had to cancel. Now, I felt bad about that for sure.
Right.
We moved it to yesterday at 3 o'clock.
Right.
Well, you know, even though I had this presentation, you know, I was multitasking going between the live market and what it is that I wanted to teach, and people were getting into it, and we went from being long to short. Well, during that, you know, during that session, you know, even though if you would listen to the show, like I did 5 hours yesterday, so if you listened to me for the first 3 hours, you know, we were going to the moon. Now, that's what the market was, in essence, was showing, but my roadmap is to take a look at information and be willing to change in a heartbeat.
And folks, when he's doing this, so picture this, when he's doing that, right, where, you know, we get a big office, we're in different rooms, and, you know, I also flipped from long to short. And we were short bonds, I closed that, we end up going short, we closed the one, end up going short. Now, so picture this, at 4 o'clock, he's finished, he comes in, and then he's explaining to me that he went short too, and it was awesome.
Yeah,
it really was.
It was cool.
Let's go to Dave in Denver. Hey, Dave, what's going on?
Hi, guys.
What's happening, brother?
Like everyone else, thanks for being there.
Well, we appreciate you guys being out there.
Yeah, you bet.
What are we going to look at?
Well, I'm like a lot of the other listeners, looking for when this thing is going to break, and IBM, of course, the leader. Now, has IBM done what you called 3 drives to the top here, and would that be a sign of it coming to an end for it?
Interesting. Okay, so let's take a look at IBM. So IBM's trading out there at 179 right now. So you got a low of 133, a high of 185. Let's bring this back a bit. See, something that you have to understand, too, is that just because IBM's been a leader doesn't mean that it needs a full breakdown, you know. But bottom line is that, yeah, it does want to go to 161. You know, IBM, no doubt, has basically given a great signal, and that signal was on August 5th, first leg down. Now, if you want to see something that's pretty wild, let's take this. I'm going to put this, and I'll just give you a small channel setup. And when you see this, this gets pretty wild. What channels love to do, look at it, did it. Oh, my God. So you break the up channel, and that up channel I'm talking about brings it to 122. Right? You break it with conviction. You break it with 56 million on the way down. You went back up and touched it with 31 million. So bottom line, that's saying that, yeah, IBM, you know, at this point only has to get down to that 157. But the way it's set up, yeah, you can get 122. That sets up the larger deal on the way down. You stay right there, Dave. We'll be right back. This is Steve Rhodes, Tom O'Brien. We're going to come right back, folks.
If you're in the market for a jumbo preferred non-conforming loan anywhere from $417,000 all the way up to $3 million, and you have a FICO of at least 720, then EverBank is your answer. As a direct lender with processing, underwriting, and funding all under one roof, EverBank can offer the most competitive rates, greater efficiency, and shorter closing times. Now is the time to act. Everbank offers fixed terms of 10 and 15 years, as well as adjustable terms of 5, 7, and 10 years, including interest-only options on primary residences. For more information, call Everbank today at 877-471-5970 to talk with a member of their concierge team that will walk you through the variety of loans they offer. That's 877-471-5970, and let them know you heard this offer on TFNN. Everbank, 877-471-5970, 877-471-5970.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. So you get the Dow 14, Nasdaq's down 2, S&P's flat. We're talking with Dave from Denver. So Dave, are you just watching IBM or are you trying to do something with it?
No, I've been watching what I call the leaders, Tom. IBM,
I see, okay.
The SMHs, and Amazon, Apple.
Sure, if they croak, forget it, it's all over, right. No, I'm with you. You know what's interesting about Apple today, which I was just saying to Steve, Apple's still not a shot, folks. That's the bottom line. To me, it isn't anyway. But I like the idea that you have Amazon coming out with what they're coming out with, and that Apple is up, and that, it's up with no juice, and Amazon can't get any juice. That is normally the last hurrah in the whole deal. That's how that normally comes down. And market-wise, what does happen, just like the market's trying to hang on with its toenails right now. Most of the time, when you see that, then the downdraft is pretty dramatic. And I suspect if this DAX closes under that swing point, and we get another 35 minutes in it.
That's right.
And then it's all over.
Yeah.
35 minutes, folks, when our man Basil Chapman and Larry Pizzavento. Basil's going to be coming up next from Newton, and we got Larry from Tucson, David this afternoon, and myself coming back. We get a lot of action out here today.
Yeah, and Dave, it's not really so much a three-drive pattern. When you take a look at the three-drive patterns, one of the things you don't want to do, you don't want to force it, okay? And so you kind of want to have the same type of time frame, you know, from from drive A to B to C, if you will. And in the case of IBM, it just doesn't have it. It doesn't have to be perfect, but this one is far enough off that it really doesn't qualify as a three-drive.
Okay.
But it is a Gartley pattern though. I mean, it did create a
Gartley cell.
It did create a 786 Gartley cell, but you know, because it's so important to also factor the volume into it, which is so cool about your system.
Yeah.
You know, you got to be careful because IBM had a big up day on July 19th. You know, and you had some huge volume there. You had, when I say huge volume, you had 13 million shares, and you're up into that candle right now. So, you know, this is one of those Gartley cell patterns that I'd stay away from. I'd look for some other piece of information.
That's right, because there's a lot of great trades out there that are easy trades.
Yeah.
Well, easy is the wrong word.
Yeah.
Just like safe. But
easier.
Better
That's right.
probability trades, no doubt. Yeah.
Absolutely.
Cooking, man. So, let's see. Today's Wednesday. Now, which is pretty cool, is that the next dates... We're in some huge dates now, but the next date's not for a couple weeks.
Not for a couple weeks.
We can get some real action going, man.
We really could, you know. And look, the lunar cycle, you know, has been working well.
Yes.
And you know, the full moon cycle's been working phenomenally well.
Right.
And you know, that's the next thing that we'll come into. So, new moon, perigee, typically turning points.
Yes.
And right now, today, you know, the way that things have been acting, and then when you put that together with the sell-off that we had yesterday, okay, the volume issues, coming back to, you know, 618 retracement areas. I mean, it was nothing more than a retracement pattern that we did, nothing else, you know, that we saw. It's nice how that's when you've got time and price that come together.
Right. And then put that together, folks, with all the press telling you that everything's going to be all right in Greece.
Yeah.
That's a beautiful thing.
You know what was interesting? You know, I mentioned that, you know, my mind was up at 4 a.m.
Yes.
And so... And I roll around, okay, I can't get back to sleep just yet. And so I turned on Squawk Box Europe or what have you. They were, I don't know if you saw it. One of our subscribers sent me an email, and it was a trader somewhere over in Europe.
Yeah, I did.
Did you see that? Yeah, and they were just out after that guy, trying to.
My take on that.
Yeah.
So tell them what happened first.
Well, it's just that there was some trader was being interviewed by someone overseas, if you will. And, you know, he was just talking about how the market was going to go down.
Yeah. Oh, is that the way? Yeah. There's, well, a little bit later.
All he was doing was, it seemed like giving his honest opinion. I don't know. I don't know anything about it. I just saw the
reason I didn't like that setup is that setup, I think, is that the press is trying to say if you go short the market, there's something wrong with it.
Yeah, no, that's what they were saying. Yeah, and I was like, we've got to be kidding me.
We'll talk about that. Yeah. You stay right there, folks. Basil Chapman's coming up next, and Larry Pizzavento, David White this afternoon, and back to me. Have a great one, folks. Have a safe one.
See you tomorrow morning, folks.
Are your cable rates rising?